King County housing market sees inventory surge and price gains. That's weird. Got inventory going up and pricing going up and mortgage rates going up. What's this actually mean? If you're a real estate broker, if you're a buyer or seller, let's get into it. Here we go. Okay, and this is Fox 13, their interpretation of the MLS data. And we're going to take a look at the MLS data. King County, the brief, the highlights here, so to speak. Maybe lowlights if you're in real estate, because this isn't good stuff. King County housing inventory surged 62.6% year over year, giving buyers more options. All right, that number seems huge. There's almost, 2/3 more inventory, but that's because we've just come off some of the lowest numbers of inventory that we've ever had. I mean, when the market is basically sold out, you can only get so close to zero. You're always going to have a handful of homes in the market. And that's what we've been battling, is basically no homes on the market because nobody wants to come off their 2 3/4, 3%, 4%, maybe even 5% mortgage. Nobody wants to leave those and move into a 7, 7.25, 7.5% mortgage. They just don't want to do it. They're like, nope, going to stay here. Going to stay still, just going to do my thing. And that's why you've got this stagnant marketplace, because nobody wants to sell their home. And, people with pricing still going up, people are now looking at a much, much, much more expensive mortgage than they were just a handful of years ago. And they don't want to commit to buying a home. So you've got it kind of coming and going, got it, from the seller and from the buyer's perspective, is this is too expensive. This doesn't make sense. We'll wait it out. So median home prices rose to $799 in Seattle, with the East Side leading at $1.27 million. Despite more listings, strong demand keeps King County a seller's market. Because normally, if you have 62.5%, inventory, that'd be a bloodbath. But because we've had such little inventory, you dump some on. Hey, look at those, shiny new numbers. Wow, that's a lot. But you've still got enough demand because of employment in the Seattle and King County markets. You've still got enough demand to basically take down segments of the marketplace and still keeping pricing going upwards. King County housing market saw a significant jump in inventory. We talked about that. Increased supply is giving buyers more options. Affordability remains a concern. I talk about this all the time on News for Reasonable People. That's concerning. And when they say concern, it means, that's something to really worry about. Concern is the media's way of downplaying something that's pretty important. Affordability. We don't have any in King County. We don't have any in Seattle. It's going to cost how much? Holy cow. You got to be dual income, no kids, and, both people work at Amazon. You know what I mean? In order to make this go. It's nutty how expensive Seattle and King County has become. So we've got total 2,994 homes were on the market at the end of January. Big increase. All right. Despite the inventory boost, demand remained strong. We had a bunch of closed sales, up 14.3%, and 1,810 pending sales, which was up a little bit from January. So all of your numbers are still basically going up. Pricing hasn't dropped. Mortgage rates haven't dropped. Inventory hasn't dropped. You've still got kind of this stagnant but moving marketplace. And here's your next section. Home prices continue upward trend. So a lot of people are saying, but with all that inventory coming on, prices must have dropped, right? This is finally the time prices are going to drop. No, you've still got more buyers out there with as much inventory has been put on the marketplace, that inventory is being sucked up because you've still got a whole bunch of employment, situations going on here. You've got all kinds of companies bringing job after job after job into Bellevue, into Seattle, into Kirkland, into Redmond. You've still got that going on, and those people have to live somewhere. And a lot of them, they want to own a house. They've got the money to do it. They're going to make it happen. Median sale price for homes in King County hit $799, 5.1% increase from the previous year. So that's median. That's median. So half fall below, half fall above that price as far as the data is arrayed. Throwing out some statistical terms there. Yep, I took stats in college. Didn't graduate, but I took them. The East Side continues to lead the market with a median sale price of $1.27 million, while Seattle's median price reached $797. I mean, our median home prices are just becoming astronomical. I mean, just nutty, right? Nutty. The only way people are going to be able to afford this is either with a massive down payment, which very few people have, or when rates finally start to come down a little bit. And I don't see that happening anytime soon. You got some of the tariff action going on. That's going to increase prices. You don't have a marketplace that is, looking forward and saying, hey, we're going to have rate cuts. Not seeing that happen. The odds of a single rate cut just went up dramatically, meaning the Fed is no longer going to probably do 2-3 rate cuts rest of this year. What's factored in right now is maybe one rate cut, maybe none, because all the indicators, the economic indicators, are saying that inflation is still going, and feds can't cut that interest rate, the federal fund rate, which has an impact on mortgage rates. That's kind of the long and short of it. But we're not seeing rates go in the right direction. And even President Trump has stated, hey, there's going to be some short-term inflation concerns, and you're just going to have to bite down and take it. We've been taking it since July of 2022, right? It's when all that money started kicking in from Biden's Inflation Reduction Act, which actually increased inflation. Inflation went up. That's why we've got the rates that we do right now, because all that money got dumped on an already overheated economy. And guess what happens when you dump more money onto an already hot economy? Yeah, inflation. Boop. It was 1.4% was inflation before Biden came into the office. And during his term, it rose to 9.1%. I mean, just a straight up, almost to the moon type bell curve. And it has been felt, it's widely impacted the real estate market. My real estate appraisal company, I mean, the number of refinances we've done. Who in the world is going to refinance out of a 3% mortgage into a 7.5% mortgage? You know what that does to your payment? Thousands and thousands of dollars on a monthly basis. Not to mention annual, not to mention over the course of a 30-year loan. You know what I mean? I mean, these have massive, massive impacts. So market activity is increasing, but affordability remains questionable. Not sure how much more affordability is going to come into the market. None. This is it. This is what you got. You can either afford it or you can't. Let's see what else the MLS comes up with. I think we've covered most of this. This is an interesting one. MLS brokers reported 722 closed sales of new construction in January of 2025. This was a 1 year over increase of 17%. So you've got a bunch of new construction happening out there, specifically in Seattle. You've got a ton of new construction because it is relatively affordable, $700-900 million bucks. But you're getting a new home, and so many people coming into the marketplace, they want and they demand a new home. They don't want to deal with having to do maintenance. They don't want to have to do renovations. They don't want to have to do repairs. They just want to move in and then just start typing at their keyboard because that's what they do all day. And those folks, they're not getting out the paintbrush on the weekend and adding some, sweat equity to their home. So new construction, median sales price for new construction homes sold in January 2025 was $760, an increase of 8.6% from January 2024 price of $700. So all of your numbers, even though they're not going up dramatically, all of your numbers have increased. All of them, and not necessarily in good directions. All right. Here's the last stat I'm going to throw at you. We got a 40% increase in activity of key boxes between December 2024 and January 2024. So you've got more activity out there, increased by 10% year over year. What's happening as the longer we get away from July of 2022, and that's my benchmark for when things just kind of came unwound. That's when rates started to go the wrong way and the market just started to slow down. What you've got is the more time that we have within this marketplace, the more people actually need to do something. Maybe it's a couple who've been, on the ropes with their marriage for a few years, and they're like, you know what? This isn't getting any better. We need to bite the bullet. We need to get this divorce and move on with our lives. Those kinds of things are happening instead of people saying, you know what? Rates might get better just in 6 months. Let's wait this out and it'll be better for both of us. Or people are saying, hey, we just had that third child. We got, and we're stuck in this 3-bedroom home. We need one more bedroom. We can't wait any longer. These kids, we need to get them into that school district we want them to get them into. We need to bite the bullet. We need to do it now. You're starting to see some of those things happening. And that to me is why you've got kind of a 10% increase here on Keybox access, which is just basically an indicator of how much more activity, whether it actually, comes down to more sales, all of that good stuff, but it's more activity. It's things are happening. And we're seeing that on the appraisal side as well. You've got people that need to live their lives. They're going to have to do things related to housing because life moves on, whether or not interest rates are at 2.75% or 3%, or they're at 7.5%, 8%. Not saying rates are going to 8, but they're a lot closer to 8 than they are to 3 right now. All right. That covers pretty much all your stats of stuff that's really going on. And I hope this helps. Thanks so much. Love to have you subscribe, do all that good stuff. And I'll see you on the next one. Bye for now.